Hey guys, if you like this content, I would greatly appreciate it if you guys like the video and subscribed to my channel. It helps make these videos worth it going forward. What's up guys, Altcoin Shepherd here with a crypto market review. As always, this is not financial advice. I'm not an expert to your own research. Today I'm just going to review, I don't know, Bitcoin, maybe a few altcoins. Just gonna check it out. I don't know. We'll see. Sorry if there's a vacuum sound in the background, but let's get to it. Okay, so let's take a look at BTC USD on the weekly. This is the Bitfinex chart. I mean, this is still like very high time frame bullish, and I don't see how you can argue anything differently personally. The last like significant area of support, I would say, is kind of around this like 40K area. To be determined if it's actually going to get there. There's still a long ways away. Significant support also around the 53K region. I think that like if price is to lose this current 60K area, that would be the first area up in my opinion. Kind of this like area around 53K or so. This would be like an area of interest, and you can look to see back all the way back in 2021. This was also an area that there was a lot of interaction with this level. You can see that price, you know, after it rallied or after it consolidated back in 2021, December of 21, came back up. This was like the first kind of supply area where price pulled back at. Again, you can see also where price, you know, right when the bear market was starting in November 21, nuked all the way down to 40K, came back up, consolidated below 50K, and then we all know what happened after that. But this would be the area that I'd be looking at on the weekly. But as I said before, like high time frame overall, you can't really, in my opinion, argue that this is bearish at all. I just don't see it. If you start to go down to like lower time frame charts, I think that it's really still important to note that price is still just really we're in a choppy consolidation range. That's the bottom line. Price obviously goes into three different market structures. As I said before on a tweet today, you can see a bearish market structure, lower highs, lower lows across the board, lower highs, lower lows. That's clearly bearish. The next is a clear uptrend where, you know, price higher highs, higher lows, and, you know, everything's really bullish. That's kind of what we were seeing before earlier the last few months. And then you see a consolidation choppy type of price action where you see it similar to where price just ranges. You know, there's just stuff like this where price is consolidating. And oftentimes actually this is where the majority of time is where price spends in these types of price action market structures. But that's the one that we're at right now. We're at this point where price is currently just consolidating, just chopping around, and you can see like we've been in this overall range since I'd say like late February, where you can see that this area of interaction around the 60K region has already been tapped several times. This was the low that was established back in late February, early March, and it depends on where you want to denote the high. I mean, you just say this is the range high here around set in mid-March. Excuse me one second, I'm gonna get some water. Okay, so you can see that this area has been interacted with a few times, but this is the current market structure right now. We're just currently ranging. I don't see anything out of the ordinary. This type of price action is quite common. You can see that, you know, ranges can look differently depending on the context. Like, for example, the last time we really saw kind of this weird range was, I would say, kind of this December time period where you saw price ranging overall. Again, kind of like this early-ish December time period where price consolidated all the way from, you know, early December all the way to kind of February, and then price made another leg up. This was similar price action to what we're seeing now. And, you know, there's not really too much of a clear trend going on right now. You're not really seeing price like clearly blitzing up. You're not seeing it blitz down. For now, 60K is the area to look for. Now, I want to note that things are, in my opinion, pretty simple. Like if you see price close below the 60K level on high time frame charts, meaning you see a daily close, a weekly close below this 60K level, I think it's really big cause for concern. Cause for concern in the sense that the short term would be more that we would view something like 53K or so. 53K is the area that I would be viewing personally. If that area gets lost, it's the last point of consolidation back in mid-February, and I expect price to certainly get around that area. 200-day EMA is also around that area, and I'm sure if you throw a fib out for the fib of the entire move, that's probably also some significant area as well. So top to bottom, fib would be 51.7K or so. This would be a 382 fib. This would make a lot of sense to me, in my opinion, to see price eventually get there. Don't know if it's going to happen. There is maybe arguments for saying that this is it, like 60K is all we get. But I certainly think that 52K is potential. I'm not saying it's going to happen, of course, but I think you should be somewhat aware of that possibility. Now, if it gets down to 52K, does that mean it's all over? No, I don't think it's all over at all. I think it's actually totally fine. It's totally healthy. If you look at previous bull markets, you can see these 30% corrections all around. So I remember back in January of 2021, 30% correction. And even, like it's so hard to see because you zoom it out, but I mean, this was a smaller one. 16% or so. Lots of volatility, of course, during that stretch in kind of late 2020. But there is going to be times where you see these 30% moves down. And, as it currently stands, 30% move from the very top, around 73K, right around that 52K mark. Again, am I saying that's going to happen? No, I don't know. But certainly be open to that possibility. I'm going to say that one thing that is a little bit concerning is that when you start to see price action like this, though, when you start to see it chopping around a lot over the course of several weeks or potentially even months, it starts to look a little bit toppy. And there's a clear difference in price action between this current area, in my opinion, versus the price action that we saw back in December. And the reason is that you can see a lot more volatility. Currently, you see a lot more swings in both directions. You see a lot of weird wicks in both directions. See more, generally speaking, in consolidation time periods, you see a lot less volatility. You see a lot less crazy wicks of price action on both sides. Whereas right now, you're seeing more price action that is somewhat similar to maybe this, I don't know, like May, April 2021. Again, I'm not saying that this is going to happen. I don't think that we're necessarily in this part of the market. Halving's right here, lots of bullish, decent macro stuff coming up in the next few quarters. I know that right now in the short term, it's very volatile though because of WW3 potential, all sorts of crazy things like that. But I think that the macro overall still looks pretty good. But with that said, just looking at the charts alone, this type of price action that we're seeing over the last few weeks, in my opinion, isn't really great. But things always look, pretty ugly, and it's important to zoom out and note that even if it does go down to 53K, that's totally fine, totally healthy. Would like to see it come down, come down, chop around, and then we form some sort of base, and then we go higher. That would be, in my opinion, pretty awesome to see. But I think that the plan right now should probably be just to go ahead and stay long. I don't think that you should really be selling a lot of your stuff as of right now, personally. But, you're going to have to make the best decisions for yourself. I think that alts and Bitcoin are going to be alts specifically are going to be several X higher than today. So I really think that like selling right now is probably not a good idea for most people. But yeah, that's just kind of my opinion overall. I think that this area is still just a range, and that there's really not a clear market structure like for this type of price action right now, and that most people should just like not stay in. They shouldn't be actively trading. It's like very volatile, and like there's crazy spikes in each direction, and like again, not really great. Altcoins, on the other hand, they're not really doing that great. Many of them have bearish market structures. I'll take a look at the ETH chart in 1 second, but I think I'll probably just go through ETH and maybe Solana. Those are probably the few coins that I'll do. But I guess the TLDR, the cliff notes of this overall video so far is that we're still in a bullish market structure, significant support back in the 40 to 44K area, but we also have strong support, in my opinion, also in the 53K area. This would be the area to buy. In my opinion, you should stay long for your current altcoins, since nobody has Bitcoin, as we all know. And if price does get down to the 53K area, I think that you should probably look to, definitely buy that area. If it does go down to there, I think altcoins take another 50% bath or something. But still pretty bullish on everything overall. Like, still don't think this is the time to sell everything and just walk away. I still think that you should just stay long, and as long as Bitcoin hasn't clearly hit all-time highs, then I think we're still okay. Like, Bitcoin probably should still go to 100K later this year. I still feel pretty strongly about that. One chart I will say that kind of has me thinking a little bit, and it's not like, for all intents and purposes, this kind of 65K region, price cleared it and stayed above it back in late 2021. And it hovered around that area now, but we're currently at risk of losing this current important weekly area, in my opinion. I think one chart or one little time period, one level that I always think about where price didn't close above this level for literally years was this kind of, was it 12, 13K area? Price really didn't trade above this level for a long time. Price nuked below it early 2018, and then it wasn't until late 2020 where price finally broke above it. Now, again, I'm not saying that the 70 or the 65K level is that area, because it has been a significantly long amount of time, but it is something that I think about as well, like that 12K, maybe the 65K level is like that 12K level where price just consolidated below it for a long time and then finally broke above, but still lots of interaction with that level. So yeah, I guess overall plan should be just to stay long for now, but then also potentially buy at 53K if you have any spare cash. Let's take a look briefly at Ethereum. I think Ethereum, ETH has underperformed Bitcoin. That's undeniable. It's been pretty disappointing, especially given the fact that ETH has always had moments where, excuse me, has outperformed Bitcoin. But for now, it does look pretty ugly, if I'm being honest. ETH hasn't looked great. It looks like if it loses this current level here at 3K, then it's probably going to go to 2,500 or something like that. That would be the area to look for. But again, on high time frame charts, it's not looking great. It's going to generally, in my opinion, follow Bitcoin.